Niladri Shekhar Das is asking that what are the advantages and disadvantages of an IPO? Look at it from a very academic point of view, that when you buy an IPO or when you buy the stock of an existing company, there is absolutely no difference. The disadvantage of an IPO is that here is a guy, or here are a set of people who are trying to sell the stock of a company to large number of people who don't know much about it. There is not much known about a relatively new company. And the people who are selling it are the insiders. They are going to be a key beneficiary. So their objective will be to sell it at as high a price as possible. There is another disadvantage of IPO. Companies, whenever you buy a share of a company in an IPO or from the market, you are going to become an owner. But the whole process of selling the share in an IPO, which is initial public offer, is that it eventually turns out into a lottery. If it is a good company and if it is priced at some price, and there's a huge demand which gets created because of the information, because of the story being weaved, because of the PR machinery or whatever, or maybe it's a good company, and the whole information being spread that here is a great company which is going public, you will actually miss out on something substantial if you don't buy this company. But simply because initially there is a huge high demand, there are many people wanting to buy a stock, and there is a defined supply, there is a limited supply. So the scarcity gets created, and that is why you see that this Happy Mind stock IPO got oversubscribed by 150 times. I have written a column on this. Read on Value Research Online. What actually drove that? It's a good company. It has made 73 crore rupees profit on it has a return on equity of nearly 26%. And it is founded by this company was set up by a very credible promoter who has worked his life at Wipro. He was the vice chairman, then he was the founder of Mindtree, which was a very successful company. It became a $1 billion revenue company, and eventually it was sold off to L&T. And now this at 78 years of age, which I think is a great risk for a business, for a founding leader. But at 78 years of age, he has taken this company public, which was set up 2-3 years ago. And so this lottery element actually makes it a very funny business. When you are buying a stock, you are actually becoming an owner. And this element of lottery creates an impression that if you get the allotment, sell it and run. You make quick profit. So IPO is perceived as a mechanism of making quick profit if you get lucky with the allotment. So these are the pros and cons. So I think you should invest in IPO as and when you get such an opportunity, but not for the lottery element. Just because you will get some allotment in some good company. And I don't think the rules of investing in IPO change simply because it is being sold for the first time. You should be investing in IPO exactly for the same reason that you want to hold the company for a long period of time. Even if after it gets listed at some price, you will keep buying it simply because it's a good company. It remains a good company. But the IPO dynamics are very different, and the noise and the fancy for IPO is entirely because if you get lucky, luck plays a far greater role. If you get lucky, you make quick money, quick bucks there.